Hello, I'm Liz Lumley of Finextra, and today in Conversation With, I'm speaking to Giles Nelson, Deputy Chief Technology Officer of Progress Software. And we're going to talk about a bit of a contentious subject here, retail banking fraud. So I think really to start off this conversation, we should start off with a question that's going to sort of pique the interest of most banks, which is how much does this cost? How much revenue is at stake for retail banking fraud?
Well, we know it's a multi-billion problem worldwide. The exact proportions are difficult to say because, of course, it is a contentious issue and it's not one that banks like to shout about. But we know that estimates in the market, credit card fraud alone, are between $8 and $10 billion a year. So it's a significant problem.
Looking at sort of fraud, I think to myself that banks need to look at patterns. And of course, that brings up this idea of the big sort of tech phrase of the moment, big data. So, how can sort of big data be used to monitor fraud activity within banks?
Well, a challenge that we have now is that banking is multi-channel. Of course, we've moved beyond just branches. It's internet banking. It's using a mobile device for banking as well. And also, there's a lot more international movement of people. So it makes it a lot more complex to be able to identify patterns of behavior that might indicate that a fraudulent event has occurred. And having multi-channels means that fraudsters can attack systems in a more sophisticated way. So where something like big data comes in, and that term is relevant here, is that what you want to be able to do ideally is to be able to look at all the transactions as they're occurring. So looking at point of sale transactions, looking at withdrawals from ATMs, looking at payments over a mobile device, for example. And instead of just looking at that information later on in the day or the next day to look for fraud that may have occurred, you actually want to be able to look at those transactions immediately, actually in real time. And that leads to the possibility of actually being able to prevent fraud rather than just detect it after the event.
Yeah, that kind of leads me on to my next question. I think whenever there's sort of a big fraud event, a lot of people in the press ask, how did this happen? What is the line between fraud prevention and fraud detection?
Well, for fraud detection, you could, many organizations will gather up information about transactions and of course then run a whole load of analytics over that to look for patterns. But fraud prevention says, well, some of those patterns at least you can look for in real time. So let me give you a simple example. So let's say that ATM skimming is one that people are familiar with. And ATM fraud is a significant issue. We had the very recent example worldwide, $45 million. This was reported just a few weeks ago. That was on prepaid cards. But if you take ATM skimming where perhaps somebody's taken the details of another card, so they then try and use that card, what you can do is to say, well, perhaps we've seen two transactions, one from the legitimate card, one from the copied card, within perhaps 10 minutes of one another, but actually they were 50 kilometers apart. So that's impossible. So we'll stop that second transaction. And if you can look for that actually quite simple pattern and do that in real time, you can prevent that second transaction occurring and lock down that ATM, for example, rather than just detect it at some point in the future. So that ability to bring some of those patterns and that analysis and to do that in real time for all of your customers then is where this idea of analysing big data in motion, all the transactions that are going on in your multi-channels comes from.
It's interesting you mentioned ATM skimming because that's something that's actually happened to me and my family. It was a number of years ago, and I won't mention the bank, but I wasn't that happy with the customer experience of that fraud that happened to me. So, but I know customer experience is a phrase that is now also being used frequently with banks. So how can banks now sort of use the way they detect fraud, manage fraud, prevent fraud to enhance that overall customer experience?
Yes, well, fraud is a very important part of the customer experience. And we're at Progress are working with a number of banks in relation to that, fraud being one of those. If I give you an example, DBS Bank, for example, based in Singapore, they had a significant issue with a fraudulent event a little time ago. And we've been working with them on using our Apama product to help with their fraud prevention and detection. And that project has gone live and has been very successful. And the root of what they're trying to do is that when this fraud event originally occurred, they suffered, reputational loss as well as, of course, of a financial loss, which any organisation would.
Sort of idea of trust with banks.
Exactly,
right now is a big
exactly,
issue.
and we're trusting some of our most precious assets with banks, of course, and they're organisations that we really have to trust. So the first loss of trust and reputation is if a fraudulent event occurs, and banks need to be able to not only detect it, but as I've said, try and prevent that as well. And it's also about giving reassurance to us. A simple example of what many banks do is if you withdraw money from an ATM in a foreign country, they'll send you a text message saying this has occurred. Okay, well that's fine because I know I did it. So that provides that reassurance. So the whole customer experience thing, which banks want to provide in various ways and can really differentiate themselves in the market. But one of the key things is, of course, fraud prevention and ensuring that people are going through things and conducting themselves in a safe way.
So, we've mentioned big data, we've mentioned customer experience, we've mentioned trust and reputational risk. So I think that sort of brings in maybe our final question to talk a little bit about the role social media might play with customers and public relations and reputational risk. Are banks actively looking to use social media for fraud prevention?
Well, they are. In particular, it's really to deal with the consequences of perhaps a fraudulent event. So we do hear, of course, on many occasions about news spreading very fast by social media. And there have been occasions, well-documented ones, where if organisations don't monitor what's going on to these feeds of social data, they run the risk of something getting out of hand when actually they could have mitigated the damage and lessened it. So it's very important as part of a real-time fraud detection and prevention system, not only to look at all the transactions occurring within your payment systems, but also to look at what's happening on social media. Because it may be the case that your first the first time that you hear about a potentially fraudulent event is on social media. Somebody may tweet the fact that something has gone wrong at an ATM.
We had a European payments conference last week in Berlin, and one of the banks said on stage that when they had an outage, in 8 minutes it was on Twitter, and in a half hour it was on the national news. Indeed.
So it really is. I would say a year ago, monitoring social media might be seen by many organisations, including banks, as a bit of a gimmick. Now it is a must-have. It really is very, very important because it is a key way that people are expressing themselves, and they expect the brands that they're working with to be able to monitor that. So to be able to look at that information, look at the sentiment, pick up key words, and to be able to get that information to the right people as part of an overall real-time view of your operations is extremely important.
Excellent. Giles, thank you very much. I appreciate it.
Thank you.
Thank you.